Let the machines do the high-frequency trading and let the humans do the low-frequency trading. You know, at the moment, the algorithms are fairly stupid. They're basically betting on simple price fluctuations. As humans, we can kind of see global macro-scale trends that the computers will never see.
And that's no fun when predators have to pick off other predators. So I think we sit back, we lengthen our time horizon. For most investors, they should be looking at weekly charts, not even intraday, let alone daily or anything like that. So I think we win. Let these guys tear each other to pieces.
Really quick, that doesn't help you. Even if you extend it, you don't want to get sucked up in a day trade where it's a mini flash crash.
Right.
Trade with limits. If you're a retail investor, trade with limits. Trade through some of these high-frequency guys and force them. John and I do this all the time. You force them to stand up to their bid or the offer when you trade through the exposed bid or the offer.
Murphy, go ahead.
Yeah, I mean, to say that human beings shouldn't be involved in short-term trading, I mean, that's a ridiculous statement to make. People have been trading for years, some very successfully. So the fact that you're going to say that machines should take over the short-term trading, there's no place in the market. You can't say that humans can't be trading short-term in the market. That's just not. That's just off. I can't even fathom that.
Well, look, it's ultimately up to the humans whether they want to engage in short-term trading or not. But the point is that the people who have traditionally engaged in short-term trading have been put out of business by computerized traders because algorithms are just much, much better at trading for the short term than humans are. They're much better at assimilating tons of information very, very quickly, reacting to it quickly, and those are the skills that are necessary to trade on a short-term basis. For long-term investing, computers really have no advantage whatsoever. They have no ability to understand secular trends or to try to predict the future, and that has been and always will be the domain of long-term investors. And like I said, that's Mr. Bogle's point of view.
Yeah.
I think you invited me on to respond to him, and I completely agree with him that human beings should not be wasting their time with speculative short-term activities. They should be engaged in long-term investing.
Manoj, you're our guest, so we'll give you the last word. And let's also note that you have been working with the SEC, the best that I can tell, to sort of educate them on high-frequency trading and how it works. Is that correct?
Yes, it's not just education. We were recently awarded a government contract to provide the same analytical capabilities that our firm uses to build strategies.
Okay.
Those capabilities are now in the hands of the regulators, and our expectation is that that's going to dramatically improve the Commission's ability to understand the effect of algorithmic trading on the markets.
Understood. Wanted to make that point. Thanks so much for joining us, Manoj. We'll talk to you again soon.
My pleasure.
Manoj Narang. As we head to break, we're keeping an eye on the Dow at fresh session highs here. Up next, we'll get an analyst take.